Jim Eckstein, as they mentioned, with TradeRocket. I'm going to try to see how this works. Okay, so totally different thing, because I don't know about you guys, but I'm way over hearing about retail banking consumers. Anybody else like me? Okay, good. At least I got two people in the audience. Everybody else, cocktails is coming in like 20 minutes. Just hang in there, okay? And I'm really not a stand-up comedian. I'm really a geek, so this is really, really interesting, fun stuff. These are facts, though, right? And this is, you know, about as basic as it gets when we go back to the first conversation we had today about innovation and where does innovation come from. Okay, so first thing we find out in the United States, 60 to 80% of all the jobs in this country are provided by SMBs. Okay, 60 to 80%, it's huge, right? And the second, I think, is the most interesting thing, right? SMBs, 13 to 1 patents. Okay, so you think about IBM, Apple, all the great patent language. You know, you hear the Wall Street Journal report every year about who issues patents, who gets the most patents. 13 to 1 SMBs to the big company, right? So here's the deal, right? SMBs drive employment and innovation. So let me ask you this question. If that's the case, why the heck is it so dang hard for SMBs to get access to working capital? Because they got weak balance sheets and bankers have a hard time lending to those. Right? So how are we going to stop this? Because this is really important. I mean, it's not just important to SMBs and guys who want to grow little businesses and big businesses, right? It's important to our country. 13 to 1 patents, people. You know, that's kind of an important thing, right? We're losing jobs and we're losing innovation if these people don't get the funding they need, okay? I say it's time for the future, right? It's time for the future of working capital finance. Completely crazy idea, right? Buyers pay when they want, suppliers get paid when they want, and funders play in a completely efficient distribution of their funds. They want to deploy capital. That's what funders want to do. That's what banks want to do. They want to deploy capital, so let's make that efficient for them. And let's let buyers pay when they want, and suppliers get paid when they want. Why is that important? Because if I'm buying something, I kind of want to pay for it when I want, right? And you know, it's kind of not that weird, right? Today, this is the way it works for the consumer. Right, as a buyer, I go pay, I get my stuff, I pay when I want. If I want to pay then, I pay cash. Right? If I want to pay 30 days later, I use my credit card. If I want to pay 12 months later, you know, maybe I get an installment loan. If I want to pay in 50 months for my car, I take that. I pay whenever I want to as a buyer, right? Suppliers, they get paid immediately. The automobile dealership, he doesn't wait for 60 months to get paid. He gets paid right then, right? It works. Why does it work? Because funders deploy capital in a fast and efficient manner. They know it, they love it, it's good stuff. They're deploying capital, they're getting good return, okay? So in the beginning with consumers, right, because everybody goes, well, how, you know, consumer's so easy compared to commercial. Well, not really, right? But in the beginning it was paper, it was an application. By the way, a little history on me. I started working in consumer finance in 1988, right? I did 26 years of consumer before I decided commercial was where it's at. So for the two guys that raised their hand and said they were tired of hearing about commercial, we can talk, okay? But anyway, this is the way it was, right? It was a paper application, it was secured lending. You could only get, you know, the only people who got a credit card initially with credit cards were those people who didn't need a credit card. Remember, membership has its privileges? Well, that wasn't for everybody. That wasn't open. That was for the people who already had money, right? So then there was evolution. Evolution in underwriting, evolution in technology, evolution in how these things were financed, and I'm talking about credit cards and mortgage loans and auto loans, you know, installment finance, all that kind of stuff. Evolution came along, and after the evolution, right, suddenly everyone had access to the supply, right? And it was easy. And the buyers, they paid when they want. And the suppliers, they got paid when they want. And the funders, they deployed capital and everybody had a good time, okay? So, good guy at NASA, Scott Horowitz, he loves this quote, and for geeks like me, we follow guys like Scott Horowitz. And so the quote is, the physics haven't changed, but the engineering had, right? And so you had this consumer situation, you know, consumer finance, everything was paper and slow and dumb and not easy. But then innovation happened, and guess what? Boom, it became fast and easy. And any one of us today could get on our phone right now and probably have instant credit within 60 seconds, and certainly by the time I'm done doing my presentation, right? So, what the heck's going on with working capital finance and SMBs, right? Why is it so hard? Why can't we get these guys the working capital they need? Well, in the beginning, there's paper, and there was secured lending, and there was ABL, and there was factoring, and nobody admits they factor. By the way, nobody admit you factor. It's never a good thing. There were liens and holdbacks, and only the largest companies who really didn't need the capital could get access to it, right? Then came the promise of ERP, and everybody said, all right, we got standardized data, we got good reporting, I got instant access to the financials of the company. This ought to help. This ought to free up access to capital, right? Well, maybe not so much. And then the next thing, automated supply chain came along, right? Several of these companies probably are invested in by venture capital people here today. I probably shouldn't put them up there, but sometimes you take risk in life, right? But anyway, it was a promise to revolution. Everything was going to be great. Only problem was they only targeted the Global 500, and it was so expensive, and it took so long to implement, right? And even then, they had 20% or less adoption rates by the supplier base, right? 20% of their suppliers took the deal. What kind of deal is that? I would get fired if only 20% of the people took the deal, right? You want a better response rate than that. All right, so here's where we got to, right? And so I would propose, right, if this worked, right, then why the heck is this happening? Why the heck do we have at any one point in the time in the global economy $40 trillion of AR and $2 trillion of funding for it? AR is an asset, people, right? It's on these SMBs' balance sheet. They got invoices, right? It's locked up. They can't do anything with it. 40 trillion, 2 trillion, okay? Seems like a big enough problem to solve. We're interested in that. So here's the next evolution, we believe, of working capital finance. First of all, there's no paper. It's all digital, trackable, searchable, auditable, all that great stuff that technology gives you, right? Next thing, taking an early payer, extending payments, happens at the click of the button. Think big Staples red easy button, push that, get cash, okay? Sounds so much better than factoring, by the way, doesn't it? No liens, no holdbacks. The ERPs are still there, but you really don't have to change them. It's free to use. It's free to use Uber too, right? Why should it cost to use the app, okay? And it's available for every business, big and small. So I would propose this is where working capital finance needs to go. I'm the CEO of TradeRocket. This is what we're building, okay? And that's the last part of the commercial. Oh, the things you can do. Suppliers can turn POs and invoices and inventory into cash. Buyers delay payments and shift inventory to funders. Funders get above average returns. All those things like great, they say win-win-win, right? Buyer wins, supplier wins, funder wins. It's true. It can happen. It all happens in minutes, not months. It's all secured and encrypted. It all runs on a distributed ledger. Didn't throw that in here just so we could use the term Bitcoin, but it really should do this. This is actually an application that distributed ledger is ideally suited for. Okay, imagine an asset on a distributed ledger that has everything in it that you need to know to underwrite and fund it. Right? Imagine a bank can log in and buy and sell invoices just like that. Okay? Capital markets deploy funding efficiently. Of course, you got to have that. It's got to be easy. Got to be easy, right? Back to my friend Scott Horowitz. The physics haven't changed, but the engineering has. And the engineering is here today to make all this work, right? Why do we care? Okay, our friends at McKinsey say we should care because there's $2 trillion of financeable, highly secure payables globally, and it's a $20 billion market. I'm Jim Eckstein with TradeRocket. Thanks.